Trendline liquidity, or in other words, LRLR, standing for low resistance liquidity, is one of the easiest forms of liquidity to spot in the market, but it has to be done a right way. So one of the most powerful liquidity pools I use in the market for targets itself is Trendline liquidity. Now, if you're coming from a retail background, okay, a simple trend line will look something like this, where there's 5 or 4, again, there's no magic number, but there's a bunch of touches, and it makes retail traders want to short or long the trend line. And where do they put their stop losses? Above the trend line. So that's what low resistance liquidity is. And the reason why they call it low resistant is because once price starts to break that first high that forms that low resistance liquidity, it will trigger all the rest of the highs and it will run it very, very quickly. So this is how it's used. This is what LRLR is. And you need to know this concept and the logic behind why it works so well if you want to be profitable using this strategy. Now, this isn't a strategy in itself. I use other entry models to enter price action, but this is a good target. So when I'm targeting this low resistance liquidity, my ultimate target is usually where the low resistance liquidity starts. So let's say I get in a pullback here. My target is going to be where it starts. It's not going to be that first high because I know if that first high is triggered, we're likely to run the second high, which is likely to run the third, which is likely to go until the low resistance liquidity kind of started. So let's look at some live chart examples of this happening. Okay, so in this example here, we get a touch, and this is when the trend line forms. But to me, this is not algorithmic enough. I need to see at least another third touch. So if I play some price and touch. So we got kind of 3 decent touches. That to me is considered low resistance liquidity. So once this first high that is the first touch gets ran, I'm expecting this to be ran immediately, and I'm expecting this to be ran immediately. And that's where I will also look to the left of the chart and I'll look for like old previous highs to be ran. So I know when this forms, we're likely to accelerate off of this break. And you can see we accelerate pretty well. Now, what's the entry model? Well, the entry model is actually not buying the breakout. That's what retail traders do. The entry model, for me, is looking for an inversion fair value gap. So something like this, obviously. I want to see this bearish gap be closed above, which tells me this trendline liquidity, or in other words, LRLR, is likely to be ran. As you all know, I only use inverse fair value gaps. And recently, I made a full free PDF of inverse fair value gap rating setups that I use to rate my own setups A through C. So if you want to check that out, just click the first link in the description. It's completely free and hopefully should help you. In this example, this is actually an interesting one. You can see we make a bunch of touches, like 1, 2, 3, 4, 5, 6, 7, 8 touches, and then we dump. Now, some people might be thinking, how is that supposed to help us if we just dump after? Well, here's the thing. When we form this, it might not always be run right away, and that's perfectly okay. That might mean there's news the next day that might want to run it or whatever. But when we start dumping, I'm going to still keep this drawn. And when we do get that model, or we do get that long setup or the inverse fair value gap, that to me is going to be the long. So you can see we dump all the way down here and we get a nice little gap here, this 2 minute, and price breaks it, holds it as support, and then we end up going for these low resistance liquidity highs later. Now, what do you notice? We actually fail to hit it in this high. We wick back down. I'm pretty sure this is earnings. And then look what happens when we hit the high. We hit this high and it instantly bursts through this high, and all these highs because it's all stop losses getting triggered. So now that you know what low resistance liquidity is, what's the difference between what ones you should pay attention to and what low resistance liquidity you shouldn't pay attention to? The first type of low resistance liquidity you should not pay attention to is when the line only has 2 touches. So if you see something like this, it's probably not significant. You really want to see a lot more, like 3, 4, 5, maybe even 6, and then that will start to become significant. The 2 touches ones will not hit always, and I do not recommend using them unless they get more touches. So keep an eye on them, but don't draw them on your chart yet. The other question I get about low resistance liquidity is how steep should it be, which is a good question. If you see low resistance liquidity that's like this, you really can't draw an algorithmic trend line to put all 4 of these on. So in my eyes, this is too steep. I just want to draw it. And the overall direction, if I drew it from this high to this high, is still pretty down vertical versus this, which looks much more like a ramp. You want it to look like a ramp, okay? The best LRLR is going to look like a ramp because when that ramp starts to break, all the orders are so easily going to be triggered versus with a steep vertical line, it's not going to easily trigger back up to all these highs because there might be a little high resistance liquidity in between here, which makes it tough for these steep trend lines to get broken. So this is what you want to look for. You want at least 3 to 4 touches, maybe even more, and you want it to look like a ramp. You do not want it to be that vertical. This is too vertical, and this will fail you a decent amount. So let's look at an example in the chart. In this example here, this is a trend line to the upside. So this is trend line liquidity. But the problem with this is it's not really looking like a ramp. It's almost too straight. You want it to be a little more rampy, like I'd say this is a good spot. But this one, it's a little too up. And besides the fact we're pretty bullish here, we're expecting bullish PD raise anyways. And it's just very straight up, and I really would not expect this to break. Meanwhile, in this example here, you can kind of see this is a lot more rampy. It's not straight down like the other one. The other one was probably at like a 45-degree angle, but this one, definitely a little looser of an angle, and it's broken well. It's very obvious. There's 4 touches, so this one I'd consider the good LRLR. And last but not least, the final example is actually right here. So this actually starts to get steeper as it goes on, but to be honest, because this touched so many times, it can get a little steep. So see how it touches 1, 2, 3, 4. Like it's not that prevalent here. But then all of a sudden it touches 6, 7, 8, 9 times. And yeah, it's a little steeper than I would like, and I would like it to be like this. But when you get these 9 touches, even though it may be at a 45-degree angle, these are still going to be important. Now, if it turned out like this, obviously I would not use that. That's just too steep. But you'll get the feel with screen time, and you should be studying these. So that is it to the end of this video. I do have a free PDF guide I recently made on my inversions setup. So if you want to check that out, click the link in the description. It's completely free. A lot of people have given me good feedback on it, so I definitely suggest checking it out. I'm going to put it in my private community only in a couple of weeks, so get it before you can. The link to join my Discord is in the description, and I hope to see you guys there. By the way, don't forget to use my code Dodgy, Prop Firm, Apex, link in the description. Use a prop firm if you want to become profitable because they will treat you much better. You're not going to lose millions of dollars. You're not going to lose real money. You're going to lose paper money, and it gives you a chance to pass the test to earn real money using fake money. So go click the link in the description. Use code Dodgy, 90% off sale right now until the 16th.